There we go. Hi, welcome everyone to Fraud Friday, Coleman Report Live. I am Joseph Coleman, the Executive Director of the Coleman SBA Loan Broker Table. We have been having fun over there on Thursdays at noon. Anna has been producing that, and Anna, what do you think? We've had 6 shows so far, and it's going really well. I think we had Rocco Parati on that yesterday, and a bunch of brokers, and it's been great. So
yeah, no, the table's been fantastic. It's definitely something that we came up with sort of last minute, but it's been a great success since we've had these past 6 series, and I'm really looking forward to it. It's just getting better and bigger with every session we're having. The speakers always impress me. So yeah, the broker lender roundtable is just an absolutely excellent experience. And
yeah,
Joseph, you do a great job hosting it.
we were Bob and I were up in New York at the Broker Fair 2024. Thanks to Sean Murray for letting him speak, and then we also brought our good friend Adam Seary, the president and CEO of Harvest Small Business Finance. They had a panel on small business lending and spoke to all the brokers. So I know, Lance, you've dealt with brokers in the past. You have a good relationship with them, and it's a vital part of the business. So I'm excited that this is starting to work out. So,
well, having a well-trained, knowledgeable broker makes all the difference in the world when you're trying to get an SBA deal done.
Absolutely, yes. And the whole point is to match make the lenders and the brokers. We feature one lender every week, and we're growing nicely. So. I'd like to say hi to John. I haven't seen you in a while, John. It's good to see you again, John Reosti, American Banker. It's been 6 months probably since I've talked to you, but it's really good to see you, and I know we're going to have a good show today. What are you working on, and give us an update on your current article that you're working on.
Well, one that just published last week was obviously involved the loan sale decision. Or the no loan sale decision. And but I had listened to the hearing the prior week, and this House Small Business Committee hearing where they had Associate Administrator Frost on, and there's a couple of things there that probably merit some follow-up. One, the major one, is that they're still pushing forward to the extent that they can with their desire for direct lending, and and then there was an admission there that however many months into the relationship with Funding Circle, they still don't have a loan made yet. So so that's still kind of in a holding pattern, that relationship, and that obviously opens the SBA up to some criticism, and it did that Wednesday 2 weeks ago.
Yeah, Lance, I'll go ahead and let you comment on that.
Well, I just think it's interesting. The SBLC licenses were a big topic of discussion, and we were all worried at first, or at least concerned, that they were going to issue a plethora of SBLC licenses. So they go out and do 3. They did 2 with great organizations, Alaska Growth and Arkansas Capital Corporation. My friends at Arkansas Capital are growing like crazy. In fact, Delaney's going to get an opportunity to visit with Sam Walls very soon about their efforts in SBLC, and they're both following the plan. The Funding Circle deal is a little more interesting to follow. I think they had great expectations for them that they would hit the ground running and do a lot of SBA lending. It's like John said, they haven't done anything at this point. So, I'm not I'm not critical of it. I just think that if they're going to get the license, they need to get on board and start doing lending.
Fascinating story, John. I would like to see the result of it and see how it moves forward. So, Delaney, let's bring you in with the pandemic era loans, and let's talk about this. Nearly 3 years after these loans are still being an issue. So what's going on with this?
Yes, and I will throw this right back to John because he wrote about it this week as well. But they did end up announcing that they were not planning on selling the COVID idle portfolio. So, John, what did you write about this week?
Well, that's the decision in a nutshell. Excuse me here, sorry. But it brings up some questions. First of all, about how will this impact the relationship again with the House Small Business Committee. I don't get the sense here with this issue that there's the bipartisan consensus that there is, with Funding Circle and that needs a relook. Here, it definitely does seem coming from the Republican side, but the Republicans control the House Small Business Committee, and they're a group that has to be reckoned with. And they do bring up a very interesting point, which is SBA explained, and they put an estimate in their letter, which was that they didn't feel they could get more than about $164 billion for the idle portfolio, which is roughly, I think they said they had $273 billion in the portfolio, so that's a little bit more than 50 cents on the dollar, but it's a substantial discount. But they didn't provide, they provided that number and nothing more. And that's what the committee has wanted to see. It didn't necessarily want it made public, but they wanted to see it. They want to see the rationale. They want to see the analysis. And the chairman made the point that they haven't yet. And they've asked for it. They've certainly asked for it. So I don't think this is the end. I don't think that this issue is going to go away yet. If they can provide the rationale and it satisfies the members of the committee, it might go away. But it sounds like there's some more explaining that's going to be required of them.
John, I have a curious question, and I haven't fully delved into this. When they sell the idle portfolio to somebody, do they have any sort of SBA guarantee on the idle loan? Because it's not like a SBA guaranteed loan where you can easily sell the guaranteed portion of loan, and whoever buys it has 100% SBA guarantee from SBA that there's repayment. So somebody buying the idle portfolio, I would assume there's not a guarantee of repayment.
There isn't, and I think that's reflective of the the discount in the loan book. Another interesting thing, and I have tried to learn more about this, but I say this with I'll say right out that this comes with a grain of salt, because I am by no means an expert on accounting, and I am by no means an expert on government accounting. But in the letter, they mentioned that they would need an appropriation to cover whatever discount ended up being agreed to in the sale. And as I read the letter more fully, that is based on an OMB I guess decision, or an OMB announcement circular. I don't know the correct terminology, but that's based on OMB's just on the way that they run the government's books. It's not based on any type of law, at least based on that letter. I need to look into that more, because that would sort of really water down the chances of any government loan sales ever in the future, because the lending the government does is in the disaster category, and it's people aren't necessarily lining up to buy those loans. While there's probably always a market for everything, it would be a market at a discounted price, and it seems like that's what they're sort of saying. On the other hand, this is a type of lending that hopefully will never have to be resorted to again. And it it might one would probably think that there's some benefits to getting this off the government's books and out of the government's hair, so to speak, so they can focus on core SBA.
Well, and two things stick out. I mean, I'm an old gray-headed man that has actually participated in preparing loan portfolios for sale from failed banks. And, I said, look at this. These are not well collateralized. The yield on the loans are very low. The probability of defaults are higher than normal. So that discount doesn't surprise me. But I was just doing rough numbers, John. They're going to spend $5 billion over the life of the loan servicing
Exactly.
these idle loans.
Exactly. In just next year is roughly $350 million, a little bit less than that this year, but close to it. It's just that is a real cost that's going to happen no matter what. And you raise a great point, Lance, because implicit in what you're saying is the income stream the government calculates and thinks it's going to get over the next whatever, the lifetime of the portfolio is. I'm sure it'll be less than 30 years, but it'll be a substantial period of time, might not be what they think it is. So, maybe it is a good idea to take the $164 billion and run.
Yeah, it's a hard call because, I can remember seeing performing portfolios with decent collateral back in 2009, 2010, selling for like 60, 70 cents on a dollar. Performing portfolios with good collateral with higher yields.
Yeah.
We're talking about a group of loans here that effectively have the collateral coverage is not really there. It wasn't intended to be a collateral loan with a very low yield and a lot of servicing requirements on top of that. So it's an interesting story. And John,
Yeah.
it may be best for them to take the quick, early, easy money and move on.
Yeah. Yeah. There's an argument to that. I will say this, it's a well-prepared letter. It's a well-reasoned argument, but what, the committee says, at least what the chairman said in his response, is two things. You should have done this 3 years ago when you could have gotten much better than 84 to $164 billion. And number two, I still haven't seen any backup data.
Yeah.
So there are two issues there. One you can argue about, and one, they probably will hold the agency's foot to the fire a little more. Unfortunately, my son is struggling to get in, but I'm going to keep the door locked.
Toddlers have their own sense of time and function, John.
Yes.
Hey, maybe we can move on to Chris Roglieri. Delaney, you are reporting that there is some more fallout and this decision to convert to Chapter 7, and there's some irreconcilable differences with the lawyer. Maybe you can shed light into this.
Yes, this will be a little bit of a brief update, but there has been some movement. As you see, the Chapter 11 bankruptcy was successfully converted to a Chapter 7. But amidst this, it seems that he will be possibly looking for different representation. His bankruptcy attorney decided to drop him as a client, as you said, after irreconcilable differences. So I guess some of Roglieri's past clients were alleging that he was using their deposit money to pay the attorney's retainer fee, and that's what kind of sparked this. But that's what we have for now. Still no information about the federal criminal investigation, but I will keep my eye on it.
I mean, just amazing. Just an absolute amazing story. Thank you for the update. Let's move on to this next story about another idle fraud, $1.4 million, 9-year sentence. That's a very high sentence. What's going on with this?
It sure is. We have another attorney here, Douglas Raymond Armston. And to give a little bit of background as to why he got 9 years for this is about, I believe, 12 years ago in 2012. He was working as an attorney, but he ended up being convicted and sentenced to 4 to 12 years. I'm not sure why there's such a range, but 4 to 12 years in prison for engaging in a multi-year scheme to steal over $10 million in clients' money from escrow accounts. So he's already got this on his criminal record. He has been barred, as I'm sure you could assume, and he went ahead and decided to run another scheme. He was going and finding other individuals who trusted him because they thought he was an attorney and said, "Hey, I see you're having some economic struggles. I have a possible way out. All I need is some information from you, your social security number, your driver's license number, etc. And I might be able to come up with a solution." So he did use this information to apply for fraudulent idle applications, claimed that they had businesses with substantial revenue. In reality, most of these people had no connection to any of these businesses whatsoever. And then he later informed them how to lie to the SBA during the loan diligence process, and they successfully obtained 1.4 million. But the curious thing is, I don't actually know what he got out of it. I'm not sure if he received kickbacks. I'm not sure if he got loans himself. That wasn't clear. So what do you guys think?
Well, my first thought, and I just want to lead the way, and if Google would like to sponsor us, I just want to let them know I'm a shareholder, but it seems to me SBA and the participant lender should have had a position called the Google search person on all these applications. They should have been required to take the information, put it in Google search and Google Maps, and just verify that it existed. Because, when I hear about all these fraudulent businesses that were developed with other people's social security numbers, other EINs, I'm like, all it would have taken is somebody typing in a business name and an address in Google to figure out if it's not going to be 100% accurate, but certainly is a lot more accurate than some of the fraud that was committed. So, I'm just, as I've heard these fraud stories time and time again, I'm like, the bank or the SBA should have had a Google search person. Just because, guys, when I'm approving a forgiveness submission on SBA PPP loans and they're still coming in, quite often I'll look through the file, look at the documentation, but I will also put their information in Google search and just verify that they're actually in business. And it was really easy. Anyway, that's just my thought.
It's so simple, Lance, but years of fraud covering with Delaney and you. I mean, that's I think that's step number one. So
yeah.
Maybe we can move on to the IRS story, Anna. That's on disaster. Yeah. What's going on with the IRS officer? His brother, PPP fraud is still going on, and this is such a headline because it's an IRS agent.
Yeah, so we have a crew of 3 here, or not 3, 6, including Frank Mosley, which was the former IRS revenue officer, and his brother. So it seems like they were the ones that kind of kicked off this scheme. They were trying to obtain money. They had obtained over $3 million from the PPP program. And so when they were doing this, it was, of course, typical, falsely certifying that these businesses had dozens of employees, hundreds of thousands of dollars in monthly payroll expenses. They, of course, used some of their expertise in taxes to assist with this fraud scheme. And an interesting part of this is they had actually drafted a contract where they would receive at least 15% of any fraudulently obtained PPP funds in exchange for their assistance with preparing and submitting these fraudulent applications.
It's their cut.
So I guess they were covering their bases. And as you can guess, those PPP funds were not used for a business. They were instead used for some personal expenses. Not explicitly stated, but
not the fees that we use. Yes.
Well, the big thing with me, Joe. The big thing with me, Joe, is a written contract. I don't know what you think about it, Joe, John, Delaney, but I'm like, this is the first time I've heard somebody had a written contract for payment of not allowable fees. I mean, that by itself, as a document, would bury them in court on this PPP fraud.
Yeah, I'm not really sure what that's helping to cover, but
yeah.
I want to
And-
promote the webinar coming up on June 20th, spotting borrower fraud and reporting to SBA's OIG as required by law. Sign up today, send an email to me or Bob or Anna or Delaney, and we'll get you signed up for that. I love the image of that. Thank you, John. It's been a pleasure. Go see
you.
to your toddler. Lance, always a pleasure. Delaney, always a pleasure. Anna,
Can
thank you
I,
very much.
Mention one last parting thing,
Yeah.
Joseph. I'm talking about fraud. You know, at that hearing a couple weeks ago, where they brought in Associate Administrator Frost, she reiterated the SBA's estimate, $36 billion pandemic fraud estimate, as opposed to 200 billion plus, which is what the OIG and so many other sources have talked about. And you know, as I hear these amounts piling up, I just wonder who is closer to the truth. And you know, that's an interesting thing. I had perhaps thought that they had quietly backed away from that over the past year, but apparently not. They reiterated it once again, and that was just earlier this month.
That's a big discrepancy
Yeah.
of figures, I would say. Yeah. Well, thank you, everyone. Have a nice weekend, and we will have a nice Memorial Day, and we will see you next week on Coleman Report Live, Fraud Friday on Friday at 1 o'clock Eastern. So thank you very much. Have a nice weekend.
Have a great weekend.
Thank you so much, Sean, and have a great weekend.
Bye-bye.